we are here to give a little bit of an intro on MW Law, and then also a little bit about your title company. So you guys are going to be at the Old Capital Conference coming up in a couple weeks. So maybe to kick it off, give people a little bit of your background and what you guys do.
Yeah, absolutely. So, thanks for having us. We're super excited to be sponsoring the Old Capital event. It's a fantastic event. And MW Law is we're a law firm. We're in the real estate investment space. We specifically structure real estate syndications, especially for multifamily. We structure real estate private equity funds. We handle securities compliance. We have transactional attorneys. You name it. Basically, what we strive for is a one-stop shop for real estate investment and real estate operators, all the types of people at these events. We have transactional attorneys who will take you from LOI to purchase agreement to, lender document review, title and survey review. Then you've got myself as a securities attorney, and we structure, the securities and the equity packages and the syndications. And we're also a title company. So we're a fee office for Alamo Title, which is underneath the Fidelity National brand. And so we're always happy to close transactions. So yeah, A to Z, one-stop shop.
So so a lot of people are, when they first, get a deal under contract, there's a lot of questions. And one of them is around like, which attorney do I need? Do I need an attorney for the contract? Do I need an attorney for my PPM? Do I need an attorney for reviewing everything? So you guys do all of that, which is great.
Yeah.
I mean, give people a little bit, like most people, when they come out of law school, do they start in this business, or sort of give us a little bit of your background of sort of how you got to this point?
Sure, yeah. Most people don't immediately fall right into private equity, right? It's certainly a little bit of a niche industry. And I say private equity broadly, we mean real estate private equity, which includes, syndications and things like that, just in a broad spectrum. From my part, I came really from venture capital. So I was always sort of in the finance space, if you will, the investment space and the deal making space and the transactional space. I took what I learned in venture capital investments as opportunistic investments and structuring deals and brought it towards real estate, which, I find to be very exciting. I think real estate's a great industry to be in, which is why all of us are here. And so being able to apply that experience and that knowledge here, I think is, it's gone a tremendous way, and it's something that we really look forward to. We enjoy doing it. And that's where we came from.
So you were telling before so you went to school at Tech, and I think,
Yeah.
or law school in Tech, and then have you been in Dallas now for a while, or?
Yeah, yeah. Dallas is actually home to us. I actually grew up here. I went to high school here, Grapevine High School, not too far. And then I went to undergrad at Austin College, which is actually a small liberal arts school that's actually north of Dallas, a couple hours north in Sherman, Texas. And then went to law school at Texas Tech. And then, pretty much been in Dallas, ever since then.
Give us an idea. I know it's sometimes this is hard, and this is what people ask us as loan originators. Give us an idea of sort of transactional volume. I know the past couple quarters have been crazy, but
Yeah,
maybe like 2021, sort of. I don't know how you guys track these, like number of PPMs or dollars
sure. Yeah.
raised, or whether on the law side or the title side. Just give people an idea of what you guys work with.
Certainly, yeah. So, on the transactional side, we have definitely, like most people, have experienced significantly higher volumes. It's been a great time for deal making. I mean, certainly right now is definitely an interesting time. We're seeing a lot of different things happen in the market. But historically, our performance, we do anywhere from, if I were to conservatively guess right now, we do anywhere from 15 to 20 syndications, per quarter. We do anywhere from, 5 to 10 private equity funds that we launch per quarter. We've closed, a couple of $1 billion in investment transactions. So we certainly do a lot of large deals. We do a lot of large funds. We close a lot of large syndications and medium and small and everything in between, right? So we've certainly got our experience in the industry. We've cut our teeth doing this for quite some time. We founded the law firm itself 5 years ago. And so this was actually August is going to be our 5-year anniversary for the firm itself, which my partner and I co-founded together. And ever since then, yeah, we've just been rocking and rolling, doing deal after deal and fund after fund and investment after investment.
So most people, let's say they're buying, a $20 million deal, 200 units in Arlington, and they're going to go out, raise money from limited partners. Most people are doing 506Bs and 506Cs.
Right.
I guess for the normal person out there, what's the difference between those two, and what are you guys doing more of right now?
Sure, that's a great question, right? Regulation D does provide two pretty common main exemptions, which about 99% of capital raisers use, which is 506B and C. And the basic difference between the two of them is 506B does not permit you to generally advertise and solicit the investment securities, but you are permitted to take up to 35 non-accredited but sophisticated investors. Conversely, the 506C does allow you to go and generally advertise and prohibit and solicit, right? You can put billboards up on Main Street. You can put social media posts up wherever you'd like to. You can go ask people on the street corner to invest in your deal. But the downside is you can only take accredited investors, right? So it depends on the goals, right? So if you're a syndicator and your goals are, hey, I need to reach a much wider, array of investors, we need to generally advertise and solicit, then yeah, we're going to go with the 506C offering that'll permit you to do so. Versus if your goals are, hey, we've got a number of people that are not necessarily accredited and we need to be able to include them in the deal, well, then we're going to take a look at 506B and see if that's appropriate for you, right? I think generally speaking, a lot of investors, even if they're only taking accredited investors, which is always advisable, they're still going to do a 506B offering, right? Because the other caveat is a 506C, while it only permits you to take accredited investors, also requires you to verify, right? And so the added burden and the extra, process that goes into that, a lot of people don't want to necessarily always deal with. And with the 506B, it's a check the box verification. So, we just need to rely on representations, and it's much easier to generally raise, right? Most syndicators, especially those that have been doing it for a while, they already have a pretty extensive network of pre-existing relationships, which they can use and bring to bear on the deals that they need.
All right. So I think you sort of gave the answer there, but is it maybe 75% 506B or 80%, 90% 506B? What do you think?
I'd say 70-30. Maybe I
Okay.
think right now what we're doing still is about 70% 506Bs. It's just the way it's the comfort, right? People are comfortable with it. There's a lot less restrictions in terms of, the verification process and those kinds of things, and so it makes things easier.
Okay. I'm going to throw a curveball. I did not prepare
Yeah.
you for this question. I've only seen this like on emails, but some people will start as a 506B and then move into 506C. Have you seen that? Is that
Yeah.
legal?
Yeah, so the legal. Well, okay, so the lawyer answer is always going to be it depends,
It
right?
depends. Yeah.
Because that is the lawyer answer. But the truth of the matter is the SEC actually released some additional integration rules, and some rules about, going from one to the other. And the short answer is you can go from a 506B to a 506C because the theory that the SEC puts forward is, look, a 506C is what allows you to generally advertise and solicit, but a 506B you're not allowed to do so. So if you were to go the other way, there's no way that you can actually prove that someone coming into your 506B didn't come because they saw the billboard on Main Street, right? So the SEC is generally okay with going from 506B to C, generally not okay going the other way, right? There's usually waiting periods involved as well and things like that. But yeah, we have seen that. We've actually done a number of deals, not a number, we've done a few deals where that's required. The problem we run into is, especially with syndications, you don't often have the amount of time that is required to wait between offerings. You've got to raise that capital fast, right? And so generally speaking, you really do want to get that, you want to establish those goals early on, and you kind of want to pick one and stick with it throughout the deal.
So obviously you see a lot of LOIs.
Yeah.
What are you seeing? I mean, we're sort of towards the end of August here of 2022. Like, what are you seeing? Are you seeing a shift in terms at all on these LOIs? Are you seeing in terms of earnest money, in terms of due diligence period? What are you seeing just in general? I mean, I
Yeah.
know it's hard. I mean, people ask me the same thing, and it's like, well, I've got like 30 deals in my head, but in general terms, what are you seeing more of now compared to maybe 6 months ago?
That's a great question. The market has certainly shifted, especially in the last 6 months, right? I mean, we've had a number of instances, not just deals, not just LOIs, right? But even if we've got LOIs and we're under contract, deals are changing before closing now, right? I mean, the market, I don't, it's the market is in a downturn, right? Let's at least say that, right? The market is certainly going through some significant changes. There's a lot of different, cap rates are not what they used to be. I think slowly we are certainly seeing a shift back to a bit of a buyer's market. But I think right now sellers are generally speaking recognizing that they're not getting the purchase prices that they wanted, right? So they're reducing purchase prices. They're making, due diligence periods a little bit shorter. because they really want to just get the deal done now. They're going to try and take whatever deal they can, right? They're starting to be more accommodating. It's moving in that direction, but who knows, right? The way the market goes, I think we're going to start to see some additional. I think we're going to start to see some direction come November. I think historically and empirically, if you look at data sets, right, especially in a midterm election year, November tends to be a bit of a fluctuating month, which helps point us in the direction for the months ahead, right? So I think there's some uncertainty in the market, and that's causing a lot of different changes. But I think as we get closer to November, we're going to start to see some things peter out or change and stuff like that.
I don't even follow the elections, so appreciate you pointing out the midterm elections. Like I follow like the 10-year Treasury more so than any
Well,
electoral race,
yeah,
really.
it's all related, right?
It's all related. So the other thing I wanted to touch on is, on a lot of these syndications, there might be, one or two general partners, and then on smaller deals, but then these deals have gotten so big, it's 30, $40 million equity raises, that there might be 5 or 6 general partners. What advice would you have for general partners out there when sort of forming their team? Because I think I see a lot of it just sort of on the loan side and working with different loan guarantors. And then you see it on sort of putting the org chart together, doing the exhibit A, all those things.
Right.
What advice would you have for general partners? Because a lot of people in the audience, they're doing this maybe every 6. They're doing it in a very tight window. It's a very compressed window, right? So they have the whole year, and then they get under contract, and it's like for 30 days, like their hair's on fire, raising equity, putting all this stuff together. So like, what advice would you have sort of now and then during that process? Because it can get a little stressful.
Yeah, absolutely. Right. I think, as far as, how to structure your GP team, there are two things that I would really strongly advise. The first is definitely make sure that you're covering all the bases you need in terms of all the competencies that you need, right? If your competency is property management, you've got that down, you know what you're doing with that. Don't forget about all the other things that still need to go into it, right? So when you're selecting GPs, it really should be about all the things that they can offer to the deal, right? Not just their ability to help with investor relations and stuff like that, but what expertise are they bringing to the table? Are they a key person in your deal? Are they someone whose balance sheet is going to be useful to a lender, right? Are they going to be a guarantor? Are they going to assist and advise me on the actual operations, right? I mean, there's so many different things that people tend not to think about because they forget that deals like this can get complicated, and the operations of them even more so after the fact, right? So you want to make sure you're surrounding yourself with people who have the competencies. The second thing I will say, and I will say it very briefly, is what's tripping up a lot of people is you have to be very careful that you're not adding a co-GP solely because they're capital raisers, right? I mean, there's a lot of broker-dealer issues that come with place. There's a big no-no to just giving commissions, including GP equity interest, to somebody just for bringing capital. You can't do that unless they're a registered broker-dealer, right? So people that you bring onto your team need to have substantial duties, roles and responsibilities as well for being a co-GP, right? So keep those kinds of things in mind, and definitely always consult an attorney.
So I did not prepare you for any of these questions, and you have absolutely done a great job. You have gotten an A on this test, so I appreciate.
Well, I'm super nerdy about this stuff. I love talking about it, so I'm always happy to do so.
So, what is the best way for people to reach out to you to get more information? Whether it's they have an LOI that is accepted, or they're already under contract and now they got to do the PPM. What's the best way for people to reach you?
Yeah, send me an email or give us a call. Either way, we'll certainly respond. My email is on our webpage, and I'm sure it's going to be provided in any of the contact information here. Our phone number, same thing. Feel free to give us a call or send us an email. We'll be more than happy to get in touch with you.
All right, Adnan, thank you for coming on and sharing your insight. We'll see you in a couple weeks at the conference.
Yeah, looking forward to it. It's going to be an exciting time.
All right, I'll see you.